Hello, Maverick Traders. Nice to see you here. This is Rob Reinhold, joined by Darren Fisher. This is the Trading Room, last week of April. So let's get into last week's news. We didn't really have a ton of actual news, especially compared to the last couple of months where we've had nothing but news and just crazy news. This week, not a lot of news. So really what happened was the market was just kind of on its own. And on Monday, it started to rally. We had a really bad last Friday. And then Monday, the market stabilized. Tuesday, the buyers came in really strong. We'll take a look at the chart. Everything looked good. And then Wednesday and Thursday were horrible days. Absolutely horrible days for bulls because we gapped up 1% and ended up down 1%. Really, really ugly. And then on Friday, we broke through every level of support. And we'll take a look at the chart, but I don't see any way how we don't retest those February lows. What really spooked the market was the bond yields. It just is kept going up and up and up and up. So the 10 years up to 291, and this inflation story is still the main driver behind the market. Everything is being driven by this narrative. We had good home sales, which home sales are likely to stay well. We had the Fed Beige Book shows that the economy's still doing well, but high inflation is a huge problem. So we're in this period of time where estimates for third quarter and fourth quarter growth are coming down. The IMF just cut world GDP growth by about 1.5 points. Germany has cut their growth rates. Whenever that happens, remember, a lot of stuff is run by formulas in the market. And when they run these formulas, they do that with assumptions that, okay, we're going to get 4% growth in GDP. And so they run these formulas and they say, these are the stocks we're going to buy because of this. When they change those formulas, all of a sudden, some of their investments become not as good and they dump them. And that's really what we're seeing is that we're seeing a rationing down of future expectations. So anything that had growth priced into it is really getting taken out and hit. So let's take a look at the markets. And I really want to just point out the difference between the SPY this week and the NASDAQ this week. Because the NASDAQ was telling us the whole time, things aren't good, things aren't good. Where the spiders were actually telling us at a certain point, things are pretty good. I really wanted to point out Wednesday's candle. We gapped up on Wednesday, lost it all. We gapped up 1%, closed down almost 2%. And then you can see on Friday, that's just a nasty candle. And we broke through all support and there was nothing but selling all day Friday. So we had the S&P down 1.7%. Sorry, that's the Dow, the S&P down 2.7. But take a look at the NASDAQ. And that's really where I wanted to focus on was the S&P actually gave you some hope Wednesday, Thursday if you were a bull. The NASDAQ never did. The NASDAQ never cleared out of the top of that range. It just never did. And so I'm looking at this thing and, NASDAQ is well weaker, a lot weaker. You can see it broke on Thursday and continued on Friday. We're pretty close. We're pretty close to those February lows. I don't see any reason why we don't get there. That is about 1.6, 1.7% away. I think it's highly likely that we get there early this week. And what usually happens at these levels, so everyone's going to be watching this 320, 318 level on the Qs. What typically happens is when they go down to that level and they hit those levels and break through it, you get a flush. You get this big flush of people saying, uh-oh, it's all gone. That's typically a bottom point. Now, look, I'm not saying it's the bottom. All I'm saying is we've had a couple really big, nasty candles. We got a lot of momentum to the downside. At some point, that will swing back the other way. And what I've seen in my 25 years of trading is that a lot of times we get these long lower shadows. And let me just point to, a candle like this over here. Not that this broke any support, but this is the kind of price action you can absolutely see when a stock comes down, breaks the support level, you get a pierce through it, and then by the end of the day, and there's a great example of one right there. By the end of the day, it's actually come back up. I think that's what we're likely to get. I could see as maybe a solid down day on Monday, and maybe we get that reversal on Tuesday. Look, this is just me looking at where the market is, how much we've moved. Remember, the market doesn't have to do anything I think it's going to. It can make up its own mind and do whatever it wants. But right here, there's no question that being short is where you want to be in the market. VIX was really tame, and all of a sudden, it came unglued on Friday, really jumped up to 28. So 28, these are elevated levels. VIX at 28, very elevated. So I think, again, we're going to see some more pain. I just think we're in for more pain. Darren, what's your call?
I'm more bearish. I think that 320 level gets pierced, and I think the bulls hanging up, try to go to cash, and a whole new slew of shorts get in there because you've got that's pretty decent support. And what really gets me on this one is the VIX. We had an update on the VIX on Friday, but that I think is the first time when we break that 320 level. I think the VIX is going to spike even more, but I don't think it's got the time to get up to that 34 level within a week. I could be completely wrong. We may get the bounce, but I think I think there's too little fear in the market to not break through those lows and continue downward. That's where I'm at on that.
Right. Looks like we are in agreement. So let's take a look at what is going to be happening this week. I think we very well could see a gap down. With how we closed, it would not surprise me. And I know as crazy as this sounds, again, if you're looking for this market to go up, or if you say you want it to go up, which hopefully you don't. Hopefully you want it to go down, because that's the direction that you should be. That's the direction the charts were telling you. We were at a -1 last week. We're going to move to a -2 this week. We are already leaning to the bear side. So bearish, I think bearish, you've got all the cards in your favor. If you are bullish, I think a gap down could be a good thing, because we need to get that panic, that capitulation where people just bail. Those are moments where there can be real significant bounces. And if we get that early on, I think we could see a bounce later in the week. The worst thing that could happen is over the weekend, everything goes okay, the market opens up, and even opens up like 0.5% in a good mood, and then it sells off again. That's going to be the worst thing that could happen to the market. If I was long, I would rather see a gap down of 0.5% than a gap up, because I think it's just going to be more reason to sell. So we don't like this market on the long side. We like it on the short side. There's lots of great shorts out there. The economy is strong, and I think, if you were in a debate, you could be saying the economy is strong, and I could be saying, hey, the market is weak. They're not the same thing. They're totally different from each other. Now, yes, there's correlations. Yes, they move each other. But to realize, just because an economy is strong doesn't necessarily mean a market is going to be strong. There's lots of things that are looking out in the next 6 to 12 months that people aren't sure of anymore, where they were a couple months ago. That's a real big change. Next week's economic reports, durable goods, Case-Shiller on Tuesday. No one's going to care about that. Friday, PCE price index. I think that's the only one people care about this week. This is the Fed's preferred measure of inflation. So if that thing comes out hot, Friday is going to be a bad day. If it can come out a little bit lower, maybe this market can find some legs, as a lot of people are saying that peak inflation has probably already happened. Those same people are saying it's already happened are also saying, but it's going to stay high for a long time. So like the peak is over, but it's not like we're going to get relief on the inflation front. So last week we were at a -1, and we're moving everything down to a -2, and really pretty close to a -3. This is about as bearish as you can get. We just need those moving averages to turn down a little bit more. That'll get us to a -3, but everything's super bearish.
Yeah, I think we're all bearish over here, but you're seeing a different story in some of the sectors here. Last week was pretty poor for every one of them, but some are holding up pretty good. Real estate was the only one that was positive for the week. You can see that right there. And we've been liking real estate for a couple of months right now, so we're pretty happy with that. Everything else, I mean, communication services, it looked like it wanted to rebound. I think last time we talked about this, we were at I think I was at a plus a -1 on communication services, like maybe the bleeding would be stopped. We're back down. There's nothing looking good in communication services, and when we go into this, we'll see a few other things. Let's take a look at the charts on the individual ones. Start out with utilities here. Now I'm at a +1 on utilities. I was a little bit more bullish a couple of weeks ago, but I'm still bullish on utilities. It didn't have a great week, but it had a better week than a lot of other ones. It did break below that high base, and that's fine. It'll find its legs someplace and probably continue to go up. I don't think we get down to 72 is the next technical level. I don't even think utilities needs to get down that far. I think it probably just needs to rest a little bit in between the 20 and 50 period moving averages, and then start marching back up. So we might have a little bit of volatility early next week in utilities, but for the mid to long term, I'm bullish on utilities. Communication services, you can see that one did not fare well at all. I'm at a -3 on this. Broke below the February and March lows already. I mean, decisively did so on Thursday. Did even blink and broke through those. And Friday was just a continuation. This might catch a bounce, but it doesn't look like. You look at a longer-term chart of this, and this will just start stair-stepping down for a long, long time, and then maybe get a little bit of a bear rally. But communication service is not looking the best. Real estate, I'm at a +2 on. You can see why. We pulled back, but we didn't even hit the 20-period moving average, and made a new swing high on Thursday. Gave it all back, and Friday wasn't looking good as well. But you can see we're still up for the week. This is looking pretty good, and in a market like this where there's strength, look for it. And strength can be defined in a market like this is just holding in. This is fine. This chart looks good. I expect this to bounce back next week pretty good. Industrials, not looking the best. Yeah, so we thought it could maybe hold in there in that little range, but it took out the early April support right there. You're so close to that support level right there at the 98 level. I think that goes down. So I'm at a -2 on industrials. This has been a really volatile market. There's been times when we've been bullish, and then we turn on a dime and go bearish. This is just one of those times that industrials, it just seems to be money goes in, money goes out. There are no steady hands. This is all fast money. There's nothing sticky to it at all. Healthcare is one of those ones that is just holding in there. It looked like it was going to go good, but you can see we were above the 20-period moving average on Wednesday, held it on Thursday. We broke through the 20 period on a gap down, and it kept going and going and going. We're just below the 50 period right now. Another one, this is all fast money, and it looks like no one wants to be a long-term holder. That may change a little bit. There's a lot of good names out there that are holding in healthcare, so I've got a 0 on this sector. I'm going to wait to see which way this goes before I commit any additional capital to the healthcare sector. Financials. These have not held in well at all. You were at a -2. It looked like we went up, classic bear rally, and Thursday gave it all back. I mean, and then Friday was even worse. You got the 20 period and the 50 period right next to each other. So I think that this has a lot more downside down to that 35-50 level is easily within reach. And I think it could, if we have a broad market move, I think financials take an even greater hit and go below those March lows. Consumer is another one that I'm going to play wait and see on. I'm at a 0. We've got some compression right there. We're at support for April. We've not broken through that yet. We might break, but you can see consumer's one that it can tear back pretty good. And have a nice little rally right there. So I'm wait and see on consumer. There's a lot of stuff out there that's been really hurt, but there's some stuff that is holding in pretty well. This is a sector that if you wanted to get into it, I would definitely look at a pairs trade, one bull and one bear, long the strongest, short the weakest. And I think that gives you, this type of market gives you the opportunity to be profitable both on the long and the short side. So take a look at that. Technology, this looks about the same as financials does. I'm in a -2 on tech. We're so close to those that March support right there. I think we pierce it. I think it goes, and you can see the Wednesday, Thursday, Friday, we had rising volume. People were trying to get off the ship very, very quickly, and things just accelerated to the downside. So I think, we see tech as something that's going to be weak. Basic materials, this is one that has been holding in there fairly well, but you can see this took a pretty big hit on Friday as well. So again, I'm at a 0 on this one, same as I am with consumer. Materials needs to prove to me that it can bounce back. If we do get if we can hold in and hold Friday's level, I'll be much happier on Monday, and I'd say a good +1. Just there's been so much technical damage done just in 2 days that a lot of these sectors are going to need time to either base for a little bit, or their climb back up is going to be pretty slow. I mean, that move we had on Friday, that could take 2 weeks to regain that level if just to get up there. That's how much damage was done just on Friday. Energy, we're still bullish on. We're just less bullish than we were on it before. I'm at a +1. We're still above the 50, but Thursday was the worst of the 2 days between Thursday and Friday. I would still say energy held in nicely. You've got really good support at the 75, and you could just be in a high base here for a while. You got to remember, energy's come really, really far, really, really fast. You got to go back into October, November, and December. You could see that we were basing there that whole time, and then we ran from 55 up to 75. I mean, that's a 50% run in a very short amount of time. So this could be one of those times where we get another 2 or 3 month base in energy, or a slow melt up, and then we have a really good run again. That's just a possibility, but I'm still at +1 on energy. So to rank everything and see where everything holds out there, on the left side, communication services is looking really ugly, -3 there. Industrials, tech, and financials all at a -2. Kind of neutral, 0 on materials, healthcare, and consumer. Utilities and energy slightly bullish, and real estate's looking good at a nice +2 right there. So let's take a look at a couple of potential trades. First one in real estate. Now, we had another trade in real estate last week. That was Realty Income. was the ticker for that one. We were long, and it was up 1.28%. Pretty much in line with the market that we had. So this week for real estate, we're looking at PLD, Prologis, and it's in a bull pullback right now. And again, wait for that confirmation. We've got another trade that we had last week. We're going to talk about waiting for confirmation, how important it is. You've got good support at that 165 level. It's only 3 points away. That's also where the 20-period moving average is. If it gets down there, that's fine. Wait for your up candle. As soon as you get that confirmation, I'm going out to June. I can't believe I'm saying I'm going out to June, and it's only April. I'm going to go long those 165s and short May's 170. It's giving me a little bit of time right there. And you'll have to check the strikes on where we get that confirmation candle. But I'm happy to hold this one for a month. This one looks like it's only got monthly options. So if you want to wait a couple of days, that's no problem with that. So in communication services, last week we had Baidu. We were short. And if you go take a look at a chart of Baidu, Baidu was down 11.5% last week. So we're really happy with that trade. I know some people have already taken profits on it, completely understandable. But that one looks like it's definitely going our way. This week in communication services, we have Roblox. This is in a low base. And my son's 9 years old, and he keeps telling me how his friends are playing Roblox. And I'm guessing a lot fewer of his friends are playing Roblox, just taking a look at this chart. So I'd say we definitely broke below support in that low base on Thursday. And it looks like Friday was a bad day as well. So how do you want to do this? This is a one that if you think it's on a march of death, and it very well could be, I'd be looking, long May's 37 puts and short this next Friday's 33s. And all you need to do is just hang out there. You're at 34 right now, so you're just looking for a couple of point move down there and reduce your cost basis. That's definitely something I would want to take a look at. I think this just bleeds lower. I don't think we're going to have any major move. It's just people are getting out in a very organized manner. No one's rushing to the exits yet. That's fine. Let's let them do that and take advantage of it as well. So in healthcare, last week we had AbbVie, and this never confirmed. Okay, it was in a bull pullback. We said definitely wait for your confirmation. Take a look at AbbVie for this last week. It never confirmed. We never had an up candle. It was down 4.5%. It can still be on a list if you want to take a look at it, but you need to wait for that confirmation. We can't stress this enough. Don't trade blindly. Wait for those confirmations. Wait for that candle, and then get in there. You're going to make hundreds of trades over a year. If you miss one, you miss one. Don't worry about it. But waiting for that confirmation is going to keep you out of a lot of bad trades more than feeling like you're missing out on a good trade. So just be aware of that one. This week in healthcare, we've got Bristol Myers. Again, another bull pullback. Wait for the confirmation right there. We're at that right at that 20-period moving average in in what you call a nice high base. But we could go down. The next support you could see down there is at the 74 level, and then that 72 level is also support as well. So while we think this is going to be long, you could still be bullish Bristol Myers even if it pulled all the way back to 72. That's still technically bullish. So wait for that confirmation. When I do get that confirmation, I'm going to be looking at the going out to May, long the 70s, short the next Friday 75s. And you'll wait to see where it goes from. If you don't want to play that, you can play this May 76.80 bull call. But this is one that you can see has had a nice long run, very organized, very orderly, perfect for a diagonal spread on that one.
Last week in industrials, even though we were at a -1 on the industrial sector, we talked about the airlines and how good the airlines were looking. And we highlighted a trade on Delta Airlines, moved up 3% for the week, and actually was up quite a bit more until the market pulled back. I think it was up around 6 or 7% at a certain point. So this week, we're going to stay with the trend of the industry group of the sector and go with BLDR, Builders First Source. Weak stock. It's been weak for a long time. And you can see we got a breakdown below support. We came back up, hit our head on resistance, and we confirmed with a nice candle here. So near-term support here is going to be at 59. That's going to be your near-term support. But if this is a bear rally, then we should likely see a new swing low. Depends on how you want to play it, how long you want to play it. For anyone looking for just a short-term trade, I think the 60-62 of this week's is just giving you 5 days. You're going to get in, you're going to get out, and you're probably going to be able to pull in about $1.20. So you got about 80 cents of risk. I think that's a good short-term way to play it. If you want to play this longer term, I actually really like both of these positions. And they're really the same position, except one has a 1-week option written against it at 60. So I like this one to the short side. This one looks like it's got more to go. In financials last week, we had Unum, an insurance company. Like Delta, it was up much bigger during the week and then pulled back on Thursday, Friday, but still up 1.6% for the week. This week, we're going to stick with, again, the direction of the sector, and we're going with Marathon Holdings. The Marathon is a cryptocurrency holding company, and cryptos have been weak, but not as weak as this. If you take a look at the cryptocurrency stocks that hold them, they're actually looking weaker than the actual currency. I think that cryptos have quite a bit to fall here over the next week or two. So I do like this whole area short. I like Coinbase short as well. But here we have a trade that is now breaking all the support it's put in over the last 2 to 3 months. Big question is, how do you want to play it? I actually just like this May 20th, 1520. Just a very, very simple bear call spread. You're probably going to get about $3.10 in. Means you're going to have about $1.90 of risk. So that's your trade. You've locked in that trade, and you basically have a month for this thing to work its way down below 15. So that's the trade on this one. If you want to be more aggressive and be able to pull the trigger a little faster, puts are fine as well.
Consumer. Last week we had Rubbermaid, NWL, and we were going to play that one sideways. It was it was a 22, 23, 24 call butterfly. We're pretty happy with the way that closed this Friday at 22.72. So I mean, we were really close to our target. Pretty happy with the way that turned out. That was a nice sideways play for us. This week we're looking at Cisco, and again, wait for that confirmation of the bull pullback. You've got some support right there, just right at the 88 level. It's pretty weak support. It was only hit it once or twice. 86 is probably more likely where it pulls back to. So just again, wait for the confirmation. Now, this one's still looking really strong right there. This held up for a lot of other things. So once I do get that confirmation, I'm going out to May, looking at the 85.90 bull call spread. This one, just set it and forget it. And again, we're going pretty deep in the money because we are expecting it to fall back, and we're waiting for that confirmation. It's going to be probably at the money, out of the money when we finally pull the trigger on this trade. In technology, last week we had AMD, Advanced Micro Devices. We were short that. We're really happy with the way AMD fell down. They were down 5.3% for AMD. So that's one that we're probably going to hold on to as well. This week we're looking at Sentinel One. The symbol is simply S. You can see that this has been weak for a long time. Classic bear rally. Came up there, broke below support. The next support right there is a buck away at 32. Then you've got another one a couple dollars away at 30. This one looks like it wants to get there and get there quickly. And you can see it, the trend line is telling you nobody wants a piece of this. Definitely look at this to the short side. So different ways to play this. I'm probably going to go out and do something a little more conservative on this, that 30-34 bear call right there. If you wanted to, again, be more aggressive, then you can do the 36 puts. But, you've got some pretty significant support down there at 30. Just that's where I'm going to play it.
In materials last week, we went actually short the chemicals sector. So we went short Huntsman Chemicals. Basically, it was flat on the week. So it was one of the stocks in the sector that didn't participate with the rest of the sector. But we're going to stick with the chemicals, and here is DuPont, DD. And this one definitely had a very, very poor week last week. And you can see we just broke through some really major support at 68. This one has all the momentum to the downside. So the question is, how are you going to play it? I think you could look at like a 65, 68. And this one is going to have weeklies. So maybe you don't go out to May 20th. Maybe you go to May 14th or May 7th. If you want to be in and out in a very clean, efficient way without having to do anything with spreads, I like the puts here. I just like the straight puts here down to 65. Go to a real aggressive trailing stop and see how far it goes. So that is a short on DuPont. And in energy last week, energy was definitely our worst trade of the week after we hit some real winners here. We got Chevron. Chevron down 6.2% for the week. So that one is definitely not gone the way we wanted to. It still could recover, but it's probably not all that likely here. This week, we're talking about Halliburton, HAL. One of the things I always talk about, and I've been talking about this a lot in the energy sector, is that when there's a sector that's really hot and just everyone loves it, and they love it for a good reason, but it gets a little frothy, and you start to see some signs that there could be some cracks. I always say I like to go down the risk curve. And that's just, I don't even know what that means when I say it, but meaning I go down, okay, this one's the riskiest. This one is the one with the highest beta. I don't want those. I don't want to touch those at all because I'm a little worried about the sector falling apart. And if the sector falls apart, all the energy stocks go down. That's just how this sector is working right now. If oil goes up next week, the sector is going to go up all together. So they're all going to move in unison. So you get to decide how fast you want your car to go, how fast you want your trade to go. If you say, okay, I don't want it to go very fast, I want it to be slow, then you go pick a slower moving stock. And that's Halliburton. It's a slower moving stock. As you can see here, it moves $1, $2 a month, maybe $3 if it gets all wild. So we're backing down here into some pretty important areas. Ultimately, this 50 period moving average is going to be the line in the sand. If it does not bounce here, this is off of my radar and thrown away because it didn't bounce. But we are in an area here where we could see any sort of meaningful bounce here. So let's say we come down, make a down candle, make a doji, we come up. All of a sudden, this becomes a tradable pattern here in Halliburton. And then it's just a matter of how you want to play it. I like the diagonals here. I really like the diagonals here. So the 35-40 diagonal call spread on Halliburton. If you have any trades you want to share, please go on to our Maverick Trading members area, go to the forum, discuss these trades with all the other traders and all the trades you want to discuss. To wrap this up, the market's becoming more bearish. We went from a -1 to a -2. We think the velocity is going to be increasing, the volatility is increasing, and so we need to adjust our trading accordingly. Whereas last week, I remember Darren was bearish, but he was very hesitant, saying, hey, I think we hang out in this area for a while before we go lower. And it was a great call because that's exactly what we did for most of the week until Friday. Now we're starting to see, we're starting to see more velocity. So we expect there to be a little bit faster movement at this point, which lends itself more to directional trading. So like last week, we wanted to do some non-directional trading and not as aggressive trading. It's now starting to move to where you can actually expect to see that. With volatility comes choppiness. I know everyone thinks volatility means it goes in a straight line. No, volatility means it goes in a crooked line. It's crazy. It goes up and down crazy amounts, 3-4% swings. Rising volatility, you have to get in trades that allow you to sit through a 3 to 4% move against you. If you don't, volatility is going to kill you. Both sides, long or short, I don't care. You've got to get into trades that make it to where you can sit through that. That's why we love the vertical spreads. You set it and forget it. You go out a month and you let that thing swing around like crazy. You do its thing, and then eventually it's going to make its move, and you're either right or wrong, and you take your profit or you take your loss. So expect that choppy trading volatility. And as always, proper position sizing. That's the number one rule. We're going to be meeting twice this week, once on Wednesday as usual for our midweek update, so come join us live for that. And Thursday, we're going to do a trading Q&A. Every so often we throw this out there. What we'd really like to have is get questions in advance. So if you have any questions, please send them into us. You should all have our email addresses. Send them into us and we'll discuss it, and then we'll take live questions there as well. Thank you so much for joining us. Everyone have a great weekend. Stay safe. Goodbye, everyone.
Bye, everyone.